Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 833A, and today's date is December 3rd, 2015, and the title of this episode is The Global Economic Crisis is Deepening and is One Event Away from Collapsing. Let's get right into the economic collapse financial news. Now, as we know, Europe is basically collapsing on itself. Now, of course, the government, the talking heads, are trying to convince everyone they're in this incredible recovery. We already see what's happening in Greece. They're already making plans to confiscate their currency, confiscate their precious metals, confiscate their precious stones. And this is definitely going to spread across Europe into the United States. Canada, Australia, you won't be left behind. And in Europe right now, we see that there are many things that are occurring where we can see the economy is not doing as well as they say it is. I mean, France's unemployment, it has reached the highest level in nearly 2 decades. And now it's above the European average. Well, of course, they can explain this away. It's all the fault of the Paris attacks. The European Union already came out and said because of the Paris attacks, this might spread to the rest of Europe. So they're already planning to blame this on another group or eventually another country. Secondly, the Service Sector Purchasing Manager Index was slightly worse than expected in November. The Eurozone retail sales, which unexpectedly, and I love when they use that word, declined. Sales declined by 0.1%. They thought this was going to increase by 0.2%. So this is the second unexpected dip in a row. How could this be? Everyone's employed. Everyone's making money. This makes no sense. Well, it does make sense. When you manipulate the unemployment numbers and when you spew out the illusionary statistics to the world, to your people, the real economic indicators are going to show what's really going on. And this is what we're seeing. Not just in Europe, but here in the United States. And in the United States, we know that they've been manipulating the initial claims, and it's been falling. It's back to the 1970 levels. And they're saying, yes, we have full employment at 5%, and most likely by the first of next year, it'll probably be between 4.8 and 4.9. Nobody's claiming unemployment, even though since June there has been 1 million layoffs, approaching 1 million layoffs. And we're seeing a little bit of a tick up in initial claims right now. It rose 9,000. Now, it's very interesting because Challenger Gray and Christmas, they have been showing that there's continuous layoffs since 2014. Nonstop, and they're increasing. More and more businesses are shutting down. Sales are declining. Revenue is declining. But of course, they need to keep the illusion alive a little bit longer. Now, we know the housing market is in a bubble. And what we're seeing right now is housing bubble 2.0. Now, we know two things about the housing bubbles. They always pop with devastating consequences, and the talking pundits out there always deny that we're in any type of bubble. And this is what we're seeing right now. Now, there is a chart that not only identifies the housing bubbles, but explains why they are inevitable and why it's going to pop and it's going to have a complete collapse of the housing market. This chart reveals the tight correlation between real, adjusted for inflation, new house sale prices, and real wages, salaries. Every time a house price gets ahead of earnings, house prices decline sharply. Since these are real price wages, they go down when wages don't keep up with the inflation. So while normal house prices didn't snag much in the late 1960s, as inflation took off, they fell sharply when adjusted for inflation. House prices fell again in the late 70s, and when they briefly exceeded the growth of earnings, an unexpected period of housing prices soared above earnings in the late 80s, and it was followed by a slump in housing in the 90s. Housing bubble 1 is clearly visible as house prices skyrocketed far above earnings between 2004 and 2008. And what do we have after 2008? That's right, a complete collapse. Now, the gap between real house prices and real earnings is even wider than it was during 2008. That's very interesting. So this tells us that housing prices are going to fall sharply once again. And guess what? The entire housing market is going to readjust and collapse. This is what's going to happen. It's inevitable. There's no way out of this. Of course, there could be some type of an event. But we are headed right there. We're already seeing the housing prices come down. Now, is this happening in every single area at the same exact time? No. But what does happen is it spreads from one city to the next city, and it takes its time, and it sneaks up on you, and then all of a sudden everyone says, what just happened? This is what happened the first go around. All those speculators that were out there flipping their houses, it snuck up on them, and they were stuck with multiple houses, and they could not sell them. And it's not just houses, it's apartment buildings, condos, and things like that. And we are seeing the same thing occur, but this time, the gap between real wages and earnings and home prices is wider than it was in 2008. That means the collapse is going to be much, much worse. Now, we understand manufacturing is a complete disaster, and it is getting worse. It's abundantly clear that we're in a recession at this point. If you want to go by the numbers from the government, the numbers from what they're putting out here. But if you look past that, we're past the recession right now. We are in a collapse situation. The year-to-year change, which is shown here on the X22Report.com site. You can see the graph there. If you're on YouTube, you can see the graph there. It shows that factory orders have now been negative over the prior year for a whopping 12 consecutive months, which is just shy of the 15 months of the year-to-year declines recording during the Great Recession. So this shows us that we, right now, are in a collapse situation. U.S. factory orders, they're back to where they were in late 2010. And we know what happened in 2008, 2009, 2010. The system imploded. And the central bank came in and started pumping it up. This time, there's nothing to pump up. They have been pumping it up. They're going to try to pump it up more, but it's not going to work. It's going to completely implode on itself. Now, there's another indicator right now that shows that there is something wrong in the economy, besides all the other things that we spoke about from all the prior reports. Another sector right now has hit a point where it's declining rapidly. And this is signaling a domestic and global collapse in trade. And what we're seeing is that the truckers, especially the heaviest Class 8 trucks with a gross weight over 33,000 pounds, it's not looking good. Because what we're seeing right now is the Class 5 to 8 orders, they have decreased by 40% year on year and 26% from October. The year-to-year decline was the 8th consecutive month of Class 5 to 8 contraction. So right now, the Class 8 orders of 16,600 were below our channel check based between 22,000 and 25,000 that were expected, a drop of 59%. This tells us that people are not shipping things all over the place. So if we look at this, we see manufacturing is down. The Baltic Dry Index is at a very, very low point. Retail sales are basically having a very difficult time right now during this holiday season, because trucking right now should be incredible. But we're not seeing that. We're seeing everything the opposite of what the government and the central bankers are telling us, because they're telling us that we're close to full employment, that the economy is recovering, everything's fine in the housing market, everything's fine in the retail market, but we're seeing manufacturing down, the shipment of raw material down, trucking is down, retail sales are down, stores are looking to close before the holiday season has even ended, and we're getting many more critical indicators screaming that there's a global economic crisis, which is basically getting deeper and deeper. And we're seeing that right now, if we look at these indicators, that the price of oil is below $40 a barrel. We saw this back in 2008, before the stock market collapsed. The Business Roundtable forecast for business investments in 2016 has dropped to the lowest level that we've seen since the last recession. Corporate debt defaults have risen to the highest level that we've seen since the last recession. This is a huge problem because corporate debt in the U.S. has approximately doubled since the last financial crisis. Credit card data that was just released shows that holiday sales have gone negative for the first time since the last recession. So sales in retail not doing well. U.S. manufacturing, as we know, is contracting at the fastest pace. And many people are saying, wow, when is the big crash coming? Well, if we're looking at this, we're in the collapse mode right now. Oil crashing, commodities are crashing, gold and silver being suppressed, junk bonds have crashed, retail declining, trucking declining. The unemployment continually moving upward, layoffs continually happening by the thousands. All we're waiting for at this point is a complete collapse of the stock market. This is all the central bank has left to show the American people and the world that the economy is doing well. This is the only thing they have to continually pump up and make it look like the economy is doing well. And they can do this very easily because they have the technology. They have the ability to have the banks throw in the free money from the Fed. They have the ability to stop the market from coming down using the high-frequency trading and the plunge protection team. Because as we look at the stock market, we can see there are so many people out of the market right now. It's just machines and the central banks manipulating it completely. And we see by the move in Greece right now to confiscate their currency, their precious metals, their precious stones, this move is going to spread across Europe. It will head into Australia, into Canada, into the United States. And this is why you need to be prepared, because when they come and they ask for what you have, you're going to need to be prepared with supplies. I mean, is it the right thing to do to say, yes, I have gold and silver and precious metals? I don't think it's any of their business. I don't think they need to know this. Hopefully the people in Greece say, I have nothing. But what you need is food. You need medical supplies. You need a weapon to protect your family. You need medication just in case you have someone sick in your home. You need toiletries. These are all the things that you need. You need to continually stock this up. You cannot stop. As we approach the end of this year, moving into next year, and I know a lot of people say nothing's going to happen next year, but how much has happened this year? Remember, these central bankers, they're only human. They're not gods. Most of them are idiots. But they know how to manipulate things. Sometimes they work, sometimes they don't. And what they're trying to do right now is put everything off so they can blame this entire system of the central banking system on someone else. That's all they're doing at this point. They have no other plan. Yeah, they can go into a country and try to prop up the system a little bit more, but it's a Band-Aid fix. So we're approaching the collapse right now. They're doing whatever they can to keep this system alive because they don't want to be blamed for this. So you need to prepare. And if you haven't started preparing, I would start now. If you are preparing, continually do what you're doing. If you want an easy way to prepare, you can go to lifereliance.com. They have bug out bags, water filtration systems, emergency foods. You can customize your order, and that's lifereliance.com. You can go right there and you can choose anything that you need. If you're shopping in other places, continue to do that. But whatever you're doing, just do it. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.